And now from the 2016 AFAANZ Conference, Financial Literacy and Investment Choice Decisions, Evidence from Australian Superannuation Fund Members, presented by Dr. Chrisann from QUT.
Thank you for coming to my presentation this morning. And before I start, I just want to say I'm really happy to be here, and I want to recognize the support from my PhD supervisors. I completed my thesis in 2014, and this is my second paper I'm trying to publish out from my thesis, and I'll welcome any feedback to improve the paper. So my thesis looked at financial literacy and in the context of superannuation in Australia. So what I'm going to start with is to look at the big context. The superannuation system in Australia is quite unique in the global measures in terms of the fact that it is compulsory. Most people, if you're a worker, you have to have part of your salary locked into a fund, and it's managed in the private sector, as opposed to centrally managed as the case of Singapore. And also it's quite different from other countries where predominantly the superannuation asset is in defined contribution funds as opposed to defined benefit funds. So the financial risk of not saving enough rests with the fund members, and so that it's quite unique. And it's also important in terms of the macro and micro level. So in the macro level, superannuation asset has grown to over $2 trillion, and it's still continuing to grow because of the mandatory nature of super. And on the micro level, it's important too because superannuation has become the second largest asset for most working Australians. So despite this importance, the engagement with superannuation matters seems to be quite low. And one of the, one of the motivation for my research is to understand why this is the case, despite superannuation asset being such an important part of people's life. And some literature has speculated that the Australian superannuation system is built on contradictory assumptions. So in one sense, the government assumed that people need to be pushed to save because they're irrational savers, so they're forced to save for their retirement. Yet once people are in the system, we assume that they are interested and capable to make informed decisions. And they're given a lot of choice in terms of choice of funds and then choice of their investment options of how their superannuation assets will be invested. However, industry research show that the level of engagement is quite low, and in fact, majority of the superannuation assets are tied in the default options. So default options are for those people who didn't make a decision, a choice. So it's the options that are nominated by the fund trustee. So there's a large proportion of asset in the default investment option. So given the choice, why people don't exercise their choice, that's what prompted this research. And in fact, they actually deliberately not make a choice. So I'm trying to distinguish between those who are in what we call an automatic default. So this is for people who didn't nominate what option they want to go into, as opposed to what we call a passive default. So this is for people who didn't choose, and they choose the default option because they believe that the default option is the implicit recommendation from the fund trustee. And this is also to be distinguished between those who actively choose the default option after they have analysed and looked at all the other options, and maybe the default option is the one that best suits to their circumstances. So I guess I just want to quickly look at some of the key literature, and one of the key things was that financial literacy is one of the key, I guess, requirements for people to make informed financial decisions. And financial literacy, a growing body of literature has found the association between financial literacy and a range of financial decision makings, things such as participating in the stock markets or making extra contributions to the US 401k plan, etc. And also financial literacy itself is also influenced by a number of factors, such as one's risk tolerance with financial risk, the sources of advice and information that they receive, and also a range of social demographic factors. However, there is limited research that look at financial literacy and decision-making in a mandatory setting. So this is for people who are involuntary decision makers, if you like, such as the case of super members. So what I've wanted to look at, what I looked at is, so the research questions that I investigated is, first of all, what is the level of financial literacy of superannuation fund members in Australia? And also I looked at what is the association between financial literacy and superannuation investment choice decisions. So how I tried to find out the answer. There's an online survey to 594 members of Q Super in 2012. So Q Super is one of the largest public sector super fund in Australia with close to 500,000 members. And the membership profile is quite broad, from the people like the gardeners, the driver, to the nurses, doctors and professionals in the government, Queensland state government. So what I looked at in terms of financial literacy, I assessed financial literacy drawing from prior studies, combining both subjective measures and objective measures. So subjective measures of financial literacy is asking people to self-rate their understandings of a range of financial topics, and objective measures involve suddenly lost my word. True and false and multiple choice questions on some economic concepts. And those responses from the measures I use exploratory factor analysis and follow up and assess that by confirmatory factor analysis. And 4 latent factors were evident. So the first one is subjective financial literacy, and looking at the self-rating of financial literacy. And then financial literacy on some general economic concepts, basic economic concepts such as inflation, understanding of time value of money, etc. Sorry, how much time? 2 minutes. Okay, thank you. And then also looking at financial literacy in terms of the understandings of risk and returns of some simple investment options and also complex investment options such as the Australian and international shares. And those factors would then go into my logistic regression models to predict high or low level of financial literacy. And then the second model is to predict whether people exercise choice and then whether they make active or passive choice. So because of the limit of time, so I'm just going to go through very quickly some key findings. So one of the findings was that higher financial risk tolerance is associated with people with higher financial literacy, and that's across the board with the 4 financial literacy index. Also consulting financial experts such as accountants, financial planner, using more financial information in terms of product disclosure statements, etc. is also associated with people with higher financial literacy. Older, male, people with higher level of educations, people with larger superannuation account balances are also associated with, are more likely to have higher financial literacy. And probably quite logically, higher financial literacy, people with higher financial literacy are also found to be more likely to exercise investment choice decisions. And for those members who did exercise choice, the their perceived level of financial literacy is a key indicator of whether they are more likely to actively choose than passively default. So, potential contributions and implications for this research, hoping that I have extended prior year studies in more comprehensively measuring financial literacy in terms of both subjective and objective measures, and also applying the context of financial literacy in this mandatory settings. And also offer insight for professional bodies in terms of specific preferences of the type of financial expert that one consult in their financial literacy and investment decisions, and identify members who may be low in their financial literacy level and therefore less likely to be engaged with super, and hopefully we can develop targeted educational programs to help those members. So thank you very much.
Short answers? Questions?
Yeah.
Thanks very much for the presentation. I've got lots from it, and I think some of the stuff you just talked about is going to relate to my paper.
Great.
When you say low level of engagement, is that low level of engagement in Australia relative to other countries, or just low level of engagement in general? Because I know that it also happens in other countries, they have low level of engagement.
Yeah, well, yeah, it's comparative speaking. In terms of Australia's lower. That's represented by the high proportion. Sorry, should I go back to? It's okay. The high proportion of asset in the default options. Yep. Does that answer your question? Yeah. Okay, great.
One more? Yeah.
Would you be able to compare it across different countries and see whether Australian in general is more financially literate?
Yeah, great question. The first paper from my PhD looked at that. The first paper that I'm trying to publish looked at some descriptive analysis, because some of the questions that I used for measuring financial literacy were drawn from international studies. So I was able to track or compare this sample cohort of members with respondents from other studies.
Ellie, would you still like to ask your question?
Well, it was just to follow on. Chrisann doesn't have to answer it, but it's similar, the context. Are there similar, it's a highly regulated environment, but it Q super. So are there similarities and differences maybe in that fund membership to maybe other fund memberships? That's all, because it's kind of a particular type of fund.
Yeah, sure. The sample cohort members here, they are, I guess, they're much more highly educated. They tend to be older members, maybe closer to retirement, so they're more active, tend to be more actively engaged, and with larger super balances. So the stakes are higher for them to be, I guess, more engaged and try to improve their financial literacy. Yeah. That's good. Thank you.